Welcome to my morning report charts appraisals on Thursday, the 31st of August with me, Rich Perry Market Analyst at Hantec Markets. We've got another day where risk appetite has improved. We had stronger than expected US data yesterday. The ADP employment numbers came in ahead of expectations. That's sort of driving a little bit of anticipation ahead of non-farm payrolls tomorrow. But also we had an upward revision to GDP for Q2 to 3%. So these two factors improved the dollar, pulled treasury yields higher, or certainly helped to pull treasury yields back higher on the 10-year and also the 2-year. But also overnight we've had data from China that manufacturing PMI came in ahead of expectations. 51.7 up from 51.4 ahead of the 51.3 expected. But you could argue that should be tempered a little bit by the fact that the service sector PMI, the non-manufacturing PMI, fell in China, but that continued positive number for manufacturing certainly helps to stabilise growth expectations for China. So that has sort of played into the market today, this continuation of the risk on rebound. Safe haven trades are falling. You've got the yen under a little bit of pressure, gold still under pressure, and also, as I said, treasury yields maintaining that little bit of a higher trek that they've had, and that all sort of plays into the dollar rally that we've seen in the last couple of days, which is now back at key levels again, around that 93 level. So it'll be interesting to see if this dollar rally continues, because it's up to levels at which you could argue gives you another opportunity to sell, perhaps. But what you are seeing is also risk volatility falling away as risk improves, and that is helping to drive equity markets back higher. S&P 500 at an 8-9 day high. Again, back to an old resistance around 2460, and the underside of this old long-term uptrend channel. So that's not the first time that the market has come to that uptrend channel. It'd be interesting to see if it fails again. So we've seen equity markets across the European session bouncing again, but is this once more a selling opportunity? Possibly. I'll show you in a bit where we sort of look at so the euro started to find a bit of support, and that tends to sort of play out as a negative for European equity markets, or eurozone equity markets, I should say. So what have we got to look forward to today? Well, we've got inflation for the eurozone and the US. You've got the flash reading of CPI for the eurozone. That's at 10 o'clock. Eurozone flash CPI expected to improve to 1.4%, but on their core expected to dip slightly to 1.2%. Interestingly, and also core PCE for the States. Now, PCE is the Fed's preferred inflation measure, so the markets will be paying attention to this. It does run a month behind. I say a month behind, I mean we're looking at August inflation for the Eurozone, whereas July PCE is out today. Expected to dip slightly on the headline, possibly to 1.3%, but maintain at 1.5% on the headline, on the core. So not a massive amount of change expected there. On the PCE, but it'll be interesting to see whether the Eurozone flash data has an impact on the market today, certainly for the euro. Now, we've got euro sterling as my chart of the day. Now, euro sterling has been in this big uptrend, and a strong reversal candle yesterday. Big, strong bear candle. That is the biggest downside candle, or negative candle, you've seen on euro sterling since April, when the market bottomed. Now that is interesting, because we see this as you've got a classic sell signal on the RSI, with the RSI well above 70, closing back below 70. That's a classic sell signal. You've got the stochastics, which are close to confirming a sell signal too, and also the MACD line's close to sort of crossing lower. So this is a key moment for the euro sterling, and euro has actually sort of just maintained its position while sterling is sort of 30 ticks lower today. So we've seen euro sterling against the dollar. Euro has maintained its position whilst cable is sort of 30 ticks lower. So that is helping to sort of drive a little bit of a rebound and maintain the support of that uptrend. But that uptrend is being tested certainly. Now, a move back below today's low, 91.83, would certainly confirm the broken uptrend, but begin to arguably, I suppose, form this top pattern. It would turn into a top pattern then, wouldn't it? Which you can put the crosshairs on there. So you've got this sort of top pattern that could be forming. So watch out for that. That's something to watch. Also, look at the momentum indicators on the hourly. Went below 30 on the hourly RSI. That has not been seen since that rally began. MACD lines are well into negative territory. So this is just arguably, potentially just an unwinding move, whereby the market has now started to top out, and this could be, if the market sort of fails around that sort of an old pivot level around that 92.30 area, 93.40. It'll be interesting to see if this starts to sort of top out, because you are sort of trading underneath the longer term, hourly moving averages, which are sort of rolling over. So this is a potential sort of crossroads on euro sterling, bit of a near-term crossroads, and today's move could be key to that. So watch out for this. You've got the eurozone inflation today as well. So again, a key factor. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.